we'll just go over some quick prices, and then I want to talk about cattle inventory and some of the implications of the cattle inventory report that just came out last week. But I think everybody knows that profitability is getting a little smaller in the cow-calf business, and cattle inventory, based off of what it's pointing out to us and the larger numbers of cattle, we're going to have a lot more beef to come in the next couple of years. I guess it's pretty exciting to some degree to see that there is some strength in some sectors of the market. Slaughter cattle market is still pretty strong, traded around 128, 129 this past week. Probably not as high as what cattle feeders wanted, but I've been saying it all spring or all winter, I guess. It's not spring yet, but that we would probably get up to 130. I think it's going to be hard to push over $130 on finished cattle, but there is that potential. Realizing we're only $1 away from it right now, but there's still no guarantee that we get there. With that being said, cattle feeders sure would like a higher dollar, especially considering that cattle are coming in lighter right now. For people that are selling or buying lightweight calves, this time of year is a time when there's a lot of people wanting to buy these lightweight calves. Prices have been really, really strong, essentially looking at about $850 a head for a 550-pound steer. Maybe a little better than that in some cases, but fairly strong prices. Not nearly as strong as they were a year ago this time, but we still have a few more weeks that we'll probably see these lightweight calf prices go up. I've got a target around 160 as my apex for that. Will we reach 160? Well, we're $4 or $5 from there. No guarantees, but I think there's still potential. We haven't had the most ideal conditions for growing grass yet, but it's only a week or two away, and grass will really start hitting hard, and so that demand for these lightweight calves is still going to be strong. There's pretty good demand in the western states that will probably support these calf prices a little longer this year with the good moisture that we've had so far across most of the nation. It's not only around here or in the southeast we think about spring forage production, but really a lot of places like Kansas, you think about the Flint Hills of Kansas, which graze a lot of cattle. They're thinking more about summer grazing prospects than they are spring grazing prospects. So, there's going to be some demand for these lightweight calves moving through the next couple of months, just because grazing prospects look very, very strong for most of these regions of the country from now through June, essentially. The biggest blunder in all the markets right now are yearling type cattle. I'm just showing 7 to 8 weight weekly auction market run cattle, but it doesn't matter if you're selling 7 weights, 8 weights, 9 weights, in truckload lots. Prices I'm not going to say they're not profitable, but they end up resulting in very thin margins for people. They're just not we've got too big a spread on our live cattle and our feeder cattle prices is what it comes down to. So live cattle prices would actually support a higher feeder cattle price, but cattle feeders are not willing to pay that because I think they think that the live cattle market is not going to hold up moving through the summer and into the fall. So we'll have to keep an eye on that, but these prices should actually be $5, $6, $7 higher than where they're sitting right now. And so we'll see how that turns out. Now here's probably one of the brightest spots of the whole market. A lot of folks always marketing these slaughter cows, these cull cows, whatever you want to call them. But we started to see really, really strong prices the past few weeks. We've had some huge gains over the past month and a half. When you start getting $15 gains on on slaughter cows, all of a sudden a 1,200-pound cow at $15, that's a lot of money that's rolling in. So you think of it from that standpoint, who's not going to take an extra $180 a head on a slaughter cow? I think most people will. So we still have some time for these prices to go up. The best thing is there'll be a long marketing window for these animals, moving from March through generally May and June is when these prices peak. But what we normally see, that the typical is that you see a strong uptrend in February, and then you just see a slight uptrend from essentially March through June. So you might just gain a couple, $3-4 a hundred. But if there's producers in the room, or for agents that are listening, you got people that have slaughter cows that are in fairly good condition, they're open, or they're old, or tell them between now and May or June is a good time to get them moved, and it may not be worth keeping them the next 3 months to get that extra couple dollars a hundred. Probably can't afford to feed them for that. Save that grass in case we have drought for some of the other cows. Slaughter's up so far year to date. Heifer slaughter's up nearly 10%. Steer slaughter's down. I don't know how many of y'all read and listen to daily commentary from different folks, but there's been some concern by a few that all this lower steer slaughter, we're backing cattle up. And if you look at some numbers, you'd say, well, that might be true, but I mean, heifer slaughter's up 10% so far in the first 2.5 months, or we're 10 weeks into the year. So we're already 1/5 of the way through the year, and heifer slaughter's up nearly 10%. Steer slaughter's only down 3%, and beef cow slaughter's up 1.2%. I really don't feel like we're backing cattle up in the feedlot as much as what I've heard some people say. And I say that also because you can look at heifer dress weights where they're below year ago levels, and a lot of that has to do with weather. But if we were really backing these cattle up, these heifer weights would be much, much, much higher. Now, we may be backing steers up a little bit, but for some reason we keep moving heifers through. You can see where steer dressed weights are have been below or right at year ago levels the entire 10 weeks that we've been slaughtering cattle this year. And I'm just really not concerned yet about the market. In other words, feedlots holding on to cattle too long, and that's the reason why they're not buying more. That could be one of the reasons why some of these feeder cattle prices are low. But I think part of the backing up of what's going on is we're holding these cattle because they hadn't performed, and so we're just feeding them a few days longer, trying to get a few more pounds on some of these steers. And the thing is steers from a grading standpoint benefit more than heifers from extended periods of feeding. So this helps those animals grade a little higher on the rail, as far as being an upper 2/3 choice or prime, and when they're underweight, it doesn't hurt to feed them a couple more weeks. And when the prices have continued to go up, it looks beneficial to hold on to those animals and carry forward. Now, if we do find out that we're backing cattle up, we may get in some serious trouble. But right now, I'm not too concerned about it. Meat production so far, 0.3% on beef production, pork production up 4.8%, and broiler production up nearly 1%. As we move throughout the year, you'll see pork production and beef production year-to-date numbers converge a little bit, and we're probably the early part of the year we see a lot of increased pork production relative to when we get into the summer months. Pork production will decline fairly significantly. But we'll see very similar beef and pork production this year, and they'll both be up a couple of percent, maybe 2.5%, 3% this year throughout the year, which is a lot of beef. I'm going to say probably 2.5% is where we're looking at. And worse than that, we're probably looking at another increase in 2020 over 2019 levels. So if you imagine beef production going up 2.5% this year, puts us probably 27 something billion pounds for beef and pork both. So that's 54 billion pounds. And then you got broiler production that's probably 47, 48 billion pounds. So that puts us over 100 billion pounds of meat of just broilers and or poultry, just poultry, beef, and pork. That's a lot of meat on the market. But we'll look at 2.5% increase in beef and pork both this year, and then probably something between 1 and 1.5% going into 2020 on that increased meat production. And that a lot of that has to do with this cattle inventory, total cattle inventory, and this number right here. It can be somewhat useful. This is this total number of animals. That's everything included: beef, dairy, calves, heifers. It doesn't matter if it's bovine. It's in this number, and just shy of 95 million head, which is up 0.5%. Last year, if you read my TCA articles at all, I think I put something in there where my way too early guess on cattle inventory was going to be up 0.3% to 0.8% this year, and actually this number right here, you say, man, that guy hit it spot on with 0.3 to 0.8%. Well, kind of, but not really. I mean, I still got this 0.5% also accounts for the fact that they adjusted last year's inventory down. And so if you compared it to what we thought January 1 inventory was a year ago, we're really only about 0.3% higher on cattle inventory than where we thought we were a year ago. And that means, and when we get to this time next year, they're going to adjust this year's numbers to some degree. But it was close enough. And we're probably looking at even to moving from 2019 to 2020 inventory, we'll probably increase inventory 0.1% to maybe 0.4% going into 2020. So you can go ahead and mark that down. You can write it down, and the next time we have this meeting a year from now, you can tell me that I was wrong or right or indifferent. But that's total cattle inventory. So, but here kind of gets us closer to what we want to talk about. Because we've got beef cow inventory at 31.8 million head, which is up 1% compared to a year ago. Dairy herd down nearly 0.8%. Dairy herd's been pretty consistent for years and years and years. We've seen some consolidation of dairy herds. Not that we really have fewer and fewer dairy cows, but we're just starting to get fewer dairymen, and then we've got a lot bigger dairies in operation, but they do contribute to that slaughter cow market and overall beef production, because all the bull calves that are born that get turned into steers and they go into beef production, and all those dairy cows also go into that beef production model. But we continue to see beef cow inventory grow. It's been growing since 2014. So we've had 5 consecutive years of growth in the beef cow herd after we had the decimating droughts in 2012 and tough times in that period. It's leading to a bigger calf crop each and every year. This is, a calf crop in 2018 was nearly 2% bigger than the 2017 calf crop. What this gets us down to is there's going to be a lot of calves that go into the feedlot, which means there's going to be a lot more beef that hits the market at some point in the next couple of years. So with a bigger beef cow herd as of January 1 and compared to last year, so we had a 1.8% increase in the calf crop from 17 to 18. Well, now we're also going to see a bigger calf crop in 19 because we have more cows in the beef herd. So that's where I'm saying we're going to see increased beef production in 19 and 20, and it probably may even result in an increase in beef production in 2021. Depends on if we moderate the herd size at all, what 2021 will end up like. But we're looking at a lot of meat protein being on the market the next few years. Feeder cattle supplies, again, this is what's outside of feedlots. We're about on par for where we should be with number of animals outside of feedlots right now. Nothing too earth shattering about this information. But it does, again, go ahead and tell you, you look at 26 million head of feeder cattle that have not reached the feedlot. That means we still got a lot of animals to go on feed, and that beef will be hitting the market. Now, this is some good information on the number of heifers that were held as beef cow replacements across the national herd. We're down 3%. Now, the thing about this number is it may have a negative. It may be less. It may be fewer animals than what we held as replacements last year for the beef cow herd, but it does not. This number does not say that we're reducing or going to shrink the cattle herd this year. With these types of numbers, with 5.8 million or 5.9 million head of beef cows for replacement, or heifers as beef cow replacements, this would still say that we're in somewhat of an expansionary mode for the beef cow herd. So that's why I say we're probably going to see a tenth to maybe 4 to 0.5% increase in the beef cow herd moving into 2020. Here gives you a regional aspect. I think sometimes it's beneficial to see the regional aspect. I define the Southeast as essentially you can take Arkansas south down to Louisiana, and then if you go across Kentucky, West Virginia, and then go south, all that's what I put in the Southeast. Total beef cows, 7.3 million head. Total decline of 4,000 head in the Southeast this year. Heifers retained down nearly 18,000. Contrast that to the Southern Plains, which I group Kansas, Oklahoma, and Texas together for the Southern Plains. Kansas is not technically a Southern Plains state, but it worked well for what we were doing here. And we increased beef cow inventory 222,000 head, and still had several heifers that we retained, even though it was lower than what it was a year ago. The Texas and Oklahoma had a lot of room for growth. They were still, they still way below how many animals they had pre-drought, pre-2011, 2012 drought time period, and so they still had plenty of room for growth. You go forward and you look at the Northern Plains, which I think I grouped that as Nebraska, South Dakota, and North Dakota, up 119,000 head. I tell you something that may be feeding into this. I mean, they still had some room for growth in these states, but Aaron was talking about soybeans, and we've seen the soybean market struggle because of the export situation with China, and there was a lot of almost all the beans coming out of the North Dakota region end up going to ports to be shipped to China, and so they've seen terrible prices, and so some of this beef cow number change may be the fact that we're going to put some of that back into grazable land. I mean, I can't say that I've heard any of that or know of any of that, but this region they can still graze something. I'm not saying they're putting in a permanent pasture. It may just be a graze crop for a year or two, or they're going to move to some other type of row crop. But some of that marginal land that they turned into soybean ground that wasn't growing other crops that were general to the northern tiers of this country are probably going to be seeing some cattle on them. The Midwest, well, that speaks for itself, and then the West would be everything on the other side of the plain states that I mentioned. But you can see where all the growth has been versus where the growth hadn't been, and the West has had some severe drought up until just recently, and then you have terrible drought and it kills everything, and then you get big rains, and then you have mudslides and that kind of stuff. But Tennessee inventory is up, I think, 4,000 head on beef cows, and we actually retained 10,000 more heifers than we did a year ago. So I think we're up to 914,000 beef cows, retained 145,000. I didn't think I had that information. 145,000 head of heifers. I think that leaves us at a total cattle inventory of 1.8 million head or something like that. But anyway, we're still the second largest number of beef cows east of the Mississippi, but Florida is tied with us, so Kentucky leads the way, and then it's us and Florida at 914,000 head of beef cows. Meat prices have been really strong. I expect these prices to continue to be strong and continue to see some upward trend in this market. That's a positive. Again, the issue is being able to move some of this beef on the export side. I've cut out the export part of the talk. Generally, I give a little short, brief export talk. But the same issues that we discussed 3 months ago are still the issues that we see today, primarily China. That's not necessarily a beef export situation, but it's an overall export situation. Japan's another big export situation that we need to reduce tariffs because other countries are starting to gain a foothold, primarily people like Canada and Mexico, New Zealand, all gaining footholds in a market that used to be controlled by the United States and Australia. Australia is still continuing to dominate. I mean, we still continue to send a lot of beef to Japan, but we've got to get a trade deal worked out, or we're not going to be able to move enough beef. We're going to see those meat prices decline. Still cheap to feed cattle for the most part. Just to show you futures, this is the March feeder cattle futures market. This you can see there the past couple of days we've lost a lot of dollars. We're hitting up against a support mark there, and feedlots don't want cattle right now. It's hard to get rid of them. I mean, they'll buy them for cheap enough if you sell them cheap enough, but they really don't want them. The one positive aspect is we are seeing some upward trend in the August futures market. So you can go from December till now, and we've seen a positive growth from the 1st of December through current. I mean, I realize the market went down yesterday, but I'm not concerned about a day drop in prices. It can easily go up that much or more tomorrow. So here's just the kind of futures-based feeder cattle price forecast. You can pick out your time period. I've been consistent with these all this winter. Have not seen any reason to really change this price forecast as of this point. I'm still optimistic that these feeder cattle will finally pick up. My March feeder cattle may be a little too optimistic right now, but looking into May and August, I really feel like these prices should pick up. Those calf prices will remain strong through May and tail off through the rest of the year.